Welcome to the Ask Me How I Know podcast, the only podcast in the multifamily niche replicating what takes place outside the walls of a seminar. This is like the lobby, where honest, unscripted conversations take place and transformation happens. We'll talk about practical problem solving in the multifamily niche, as well as overcoming limiting beliefs. Thank you for joining us today, and now for our featured guest. Welcome back to Ask Me How I Know. I'm so glad that you are joining us. And today I always have really interesting people, but oh my gosh, Tim Yusubov, you are absolutely, I love our pre-conversation, and I cannot wait for our audience to hear just your fascinating story and your insights.
Thank you, Julie. Thank you very much. I'm glad to be here.
Tim, you have come to the United States. You've been here for over 15 years now. And can you tell me a little about some of your experiences?
Absolutely, Julie. So I came here in 92 when I was about, I have to remember now. I think about 15 or 16, something of that nature. I also started my college, and I actually started my professional career when I was 8 as a software engineer. I worked at Caspian Computer Center, and I got myself a job as a software developer, and I worked there for about a year and a half before I immigrated here. And around 96, I got my first professional job as a software engineer in the United States, and my career began. So ever since, and I still have a W-2 job. I'm a software engineer to this day, senior software engineer, and I have a W-2 job just like everybody else.
I've noticed I've met a lot of software engineers in the multifamily, niche. And what I've noticed is that you guys make amazing underwriters. You're so meticulous about details. I love it.
Yeah, that's part of our job. Details, details, details.
Those are good. We need people that love details so much. Well, I was thinking about when I was a kid, and I'm just kind of going back in time a little bit because of when you were in, Russia and what was happening in the economy there. And I'm just seeing so many similarities, maybe not as as exasperated here in the US yet, but I was thinking that you've lived through something very interesting as a child. And I'm remembering little Julie in the 1980s watching the news and seeing hyperinflation. And I literally remember watching the news, which I actually don't watch the news anymore, but it was on in my house. And I remember watching, and I'd see the stores, and I would see these lines out the stores and the people just trying to get basic things like bread and hyperinflation. And I didn't understand that as a kid. Now I understand a little bit more, but what were your experiences with that?
Yeah, brings me back, I would say probably when I was 12, I went through something like that. I was about 12 or so. I remember when the USSR devalued a lot of currency. There was basically an inflation, I guess, at some point. What happened was that everybody who saved their money, and basically that was the way of life. People would save their money, they put it in a bank or under the pillow. And what happened was, like, the government decided that there was such a big inflation that they're going to devalue the currency, and people would get maybe $10 on their $100. So I remember I stood in line with my grandfather when I was about 12 for 3 to 4 hours, just waiting for him to be able to get access to whatever he had left in his savings. All these people lined up for I can't remember how long the line was. It was just horrible. And I could not wait to get out of it. It was just such a bad experience. And not just this line to the bank. I mean, everything around us, the food stores, and there was a lack of food, a lack of produce. So many things that got devalued at that point when that moment in time actually happened. So I know nothing like that probably ever is going to happen here in the United States, but the fact that the money getting devalued with all of that cash being injected into our economy because of COVID-19, people have to understand that sitting on cash and just waiting, saving it is not really going to make them more money. If the money actually get devalued, they're going to be able to afford less of things. And the simple principle that the money have to be making money. We don't make money to spend it. We're making money to make more money. So the money basically have to be making money themselves. So they have to be making babies.
Money babies. Tim and I were
Money
talking
babies,
before
right?
we started about different ways of looking at money. And like, you want to make money while you sleep, Kiyosaki says, the little
Yes.
purple book. But a lot of people do that where they work hard and they save and they're really great people and they have the best intentions. They're being responsible and they have their 401ks and they're saving up for retirement for that glorious day. And then, wow, you're 80 years old, for like your grandpa, that was his, he worked hard, he was responsible, and then
Yep.
bam, devalued. What you and I know is that there's another way. There's a way to hedge against that. Are there
Yes.
alternative investments that really help people out?
Absolutely. And the alternative investments, we're talking about real estate here. The real estate is one of the alternative assets that you can invest, alternative investments you can invest that will make you money, just like Julie said, will make you money while you sleep. And that's the idea. I'm coming from W-2 job. Still have a W-2 job. And when I started my career, I always was enthusiastic. I was positive, and I'm still is positive person. But the way I saw things that, I'm gonna get rich, I'm gonna become wealthy, I'm gonna have my six-figure salary, I'm gonna be able to make more, and eventually I understood, yes, I'm gonna be making some money, but don't forget the taxes, don't forget the college education. Don't get me wrong, my kids are going. I mean, I'm still making enough money to be able to afford to send my kids to private school, but we're talking about college, and that's $30,000 to $40,000 a year. I think we just
No,
talked
but
about
your
it.
kids are going to be Ivy Leaguers and they're going to be lots of zeros and commas.
I'll hold them accountable. I'll hold them
Okay.
accountable for sure. Yes, but still, we're still thinking about sending our kids to colleges, and we're still thinking about having our kids to go through some experiences and not necessarily have a college debt when they graduate. Right?
Right.
I mean, we can leave them the debt and say, well, okay, you go ahead and work it off, and then you'll be able to buy something. But guess what's going to happen if they do that? They're not going to be able to buy their first house. They're not going to be able to save up because they're going to be paying all that debt. So thinking ahead and saving and making sure that your money actually is making you money, not necessarily sitting at 0.2% or 1%, whatever the banks are paying these days, is the right way to do it. Also, you
Well,
have to be investing smart, right? Putting I mean, having into 401k and writing it on stocks is good because you're still employed. You can't take it out. But if you're thinking about the capital that's sitting from your previous jobs, your RA accounts, or any of that,
yes.
it's just making very little money on it, 4, maybe 5, 6%, right? And there are alternative vehicles, of course, like we said, real estate. You put into real estate and it's making you a lot more. For example, on your $100, if you invest $100 today, over 30 years at about 15% rate, you're looking at something close to $6,500 that those $100 will turn into. That's compound effect. Now, if you're looking at 17%, we're talking about a little over $11,000. So imagine if you had like $20,000, $50,000, $100,000 writing your 2%, your 15%, your 17%, maybe even 20%.
It adds up so fast. And I love how you back that up into a lot of people have these jobs that they had prior to finding the W-2 that they've been in or that they're going to be in for a prolonged period of time. And so it's like my husband and I, same thing. We had, the small chunks of money from different jobs, and we ended up rolling that over and using a EQRP. Now we're able to invest that. And so it's like, if you can combine this, and we couldn't actually combine ours, but we can invest it in the same thing. But because there are all the rules and regulations about that. Always
Yeah,
see your tax people,
yeah, yes.
caveat,
Your
caveat,
CPA.
asterisk. This is not professional advice on that part. But, I mean, it's like you take that small amount of money and you invest it into something better. you partner it with some other, you can put, like I was able to combine a couple of mine. There are ways to snowball that.
And we're looking at something. My wife just stepped out of her nursing career for a little bit because of this COVID-19, and she's getting a better education. She's actually going to be a nurse practitioner soon. Well, she already is a nurse practitioner. She just needs to pass the exam. But we're taking whatever she saved up and we're going to roll it into self-directed IRA, LLC, and then we'll invest it into something bigger versus whatever she could get from her job from her employer, in which vehicles she could invest. Typically, those funds basically tell you, okay, you can invest into A through B or from A to C, but they're not going to give you the full spectrum, and the investments there are not really.
And you're limited. A
Yes,
lot of
very
times
limited.
with those vehicles, you're limited to, like you said, you have here your four choices of what you can invest in. So you
Yeah,
might, hey, do I want my money just sitting in the bank making absolutely nothing in a savings account? It feels good to some people to have that money there, but it's not doing anything. And so it's not
yes,
growing.
it's not. And imagine if we're going to be talking about inflation tomorrow. Your $1,000 really going to worth only half of that.
Hmm.
How would you feel about that? It's like, you bought some stocks and all of a sudden your stocks fell and you're feeling terrible because you really need to get that cash out, but you can't because you're going to get only half of it. So you have to be thinking straight. You have to be thinking long term.
In your opinion, and on my show I have lots of wonderful guests, and I value everyone's opinion tremendously. So what would you say, why would you say, hey, multifamily investing is a great way for you to grow your money and it's safe? Like, how would you, and we have to say safe, asterisk, 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 everything
Yeah,
has a risk to it.
right. Absolutely. Everything has a risk. And why I prefer multifamily over some other investments, because for a couple of reasons. First, I know what I'm investing in. I know the area, I can research the area, I can see the neighborhood. Those typically do not change like a stock market. They do not change overnight, even with riots. If the riot happens, the neighborhood is still going to be standing there. Okay, let's say the building has been burned. There is insurance that will recover and will rebuild it. It's still going to be there. Versus stocks, you don't know what you're really investing. You don't know what's going on in the background. So real estate is actually something that you can physically touch, you can physically see, you can more or less predict what's going to happen to this. You see the trend, you see the neighborhood, you know what can happen, what's going to be in 5 maybe years, maybe 10 years. So that's one of the things. The other thing, it's actually backed by the tenants. They're paying rents. The fact that half of them will pack and leave overnight is not going to happen.
Right.
You might lose maybe 10, 15, depending on the size of property. Let's say it's 100 units. Yeah, you can see that. I can see that. But still, you're going to be making money. That's the second thing. Third thing, banks, when they lend you money, they vet you like there is no tomorrow.
Isn't that the
They,
truth?
yeah, the same
Especially it's
thing.
a commercial loan. So, if you're
Oh, yeah.
new to this show and new to this concept, like multifamily investing is not like getting a single family home. It's not like, oh, I'm going to go buy a rental that's just one door. You are going through an intense process. You have to prove that this asset's
Yes.
going to perform.
Absolutely. And banks have teams of people that will study the market, that will study the cash returns, that will study the property management. They will know more about this property than you can possibly even find out. They will even go and look at the insurance claim history on the property. They will see how much crime that area is producing or it had in the past 5 years. So something that you will never even might get from the previous owner. So they will approve that. If they will approve that, they have more certainty in this because they have more interest in it than you can possibly imagine them in stock. So there's going to be somebody behind your back. The bank is going to be behind your back, backing you in this investment vehicle. So that's another fact. And I'm sure there are a couple of more. I just can't recall.
You know what?
Uh,
What I know is that like once I start talking about the benefits, I'm like, well, and there's this and this and this. It just continues to snowball. But I know that you have had some situations where you're like, yeah, I'm not going to invest in that one.
yes.
And so there are good investments and there are bad investments, just like choosing your stocks, and you've kept yourself from getting burned. So usually ask me how I know is like, oh boy, I learned that the hard way. But I think that you've been able to skirt that by being smart.
Right.
Not
Yes.
that other
And
people weren't smart. Boy, I have a lot
no,
of
no.
asterisks in this episode, don't I? Like,
It, you know what you know, right? Since I'm a operator and syndicator, I know how to underwrite deals. I know which numbers to go after, which numbers to examine, which numbers will show me how secure this investment is. I mean, I don't think there is such a thing as a bad deal. There is a riskier deal, and there is more stable for sure deals. And I like
that's
to
a
invest
great
in
way of
deals.
saying that, by the way.
Thank
That's
you.
really, really good.
So I like to invest in deals that are for sure, and I know they have a higher probability of getting my returns. They will all return some kind of return. The worst case scenario, well, not the worst case scenario, but I guess the riskier ones that will just get you your investment back, or with some additional percentage. I'm looking at deals that, okay, there's a projection. Let's say it's a 15% projection over the next 5 years, and I will look at the numbers to make sure that these numbers are actually backed by the underwriting. The underwriting gets me closer to the projections that the operator is offering. And I've looked a lot of deals, and yes, there are certain key elements that you have to look, and it's not just one or two; it's a combination of them all that will tell you how optimistic I should be or how realistic I should be about this deal. And quite a lot of times I've seen the deals they're just too optimistic. You have to be a little bit conservative. You have to be more mindful of little things that a lot of people don't notice. And sometimes people will just discount or throw those important little things out of the deal, and they show you, oh, well, you can make 15 to 20%. Yeah, but if you include those little things, that deal will not get you those 15, 20%. It might actually get you 7 or 10.
Can you tell about a couple of those details that you're like, mm, I'll pass on this one?
Certainly. Some of the things I like to look at are, first, I actually study the market. When I look at the deal, I actually study the market. The market will tell me where it's actually happening to it. A lot of people buy these deals at cost greater than the development cost. Let's say they make an offer on a deal. Let's say in that market, to build the property, the cost is about $130,000 per door to build it from scratch.
Yeah, ground up
And
development.
ground up development, correct. And they would make an offer at 150 at $150,000 or $160,000 a door. Doesn't really make a compelling reason why that property is going to be performing as well in a year or two, because I'm sure that if properties are trading at this price point in that market, somebody's going in and developing at a lower point, and it's going to be a competition. So it means that you're going to have tenants that are going to be paying less, and you're going to have to discount your property even more at that point to be able to attract these tenants. It's just a little thing. For example, in underwriting, we also look at the economic occupancy altogether, and that's including any discounts the property is giving in order to bring their tenants. In some underwriting models, people take them out and they don't include them at all just to show better returns, but they're actually additional discounts that these people have to get in order to be able to move in. Or, for example, the rent rolls. When you look at the rent rolls, some properties offer their tenants first couple of months for free. They don't take the deposit, or they take a very, very little deposit, which means those tenants can leave in a month or two. Yeah, some of these little things.
It really is the little details really do speak volumes. And when you're talking about the economic vacancy, there are some newer people in the audience, newer to multifamily. And so we're just talking about who's actually paying. They're physically there in the building, but they're not paying full rent, or maybe they're not paying any rent at all. And there is a lot of that happening during COVID. So it's different than actually a physical vacancy, and a lot of times people think like, oh, it's vacant, nobody's there. No, we can be impacted in an entirely different way. And And I think that's a metric that we're really going to have to, everyone's really going to need to be paying attention to over the next
Yeah,
few years, especially.
absolutely. So the other thing, for example, fees. So a lot of operators, they include those fees as additional income in the property. What they don't realize, those fees actually go to the seller's pocket, and they're not deposited into any accounts. So when they close, there's going to be a deficiency of that amount of those fees that they accounted for. That's going to give you a lower projected returns, and you're going to have to spend more on things like management. And for example, some properties allow dogs, and they will show you that, well, they're collecting about $200, or no, I'm sorry, additional $20 a month per unit from people that actually have pet. But those not a guarantee, right? Today you have a pet, tomorrow you don't, and you can't
Things
take it
happen
into
to
your account.
pets.
Yes, they're not moving out. You can't collect move out fees, right? So those fees you typically don't underwrite into your model. You don't account for them. So
Yeah. Yeah, these are really important. So when you are looking at, if someone said, wow, you know what, man, Tim, he knows his stuff and he's been able to not get into the ask me how I know the hard way because he's been very calculated and careful. But how do I know? I always think about my dad who is in residential real estate. He'd say, oh, they're going to sell you swampland, like, how do I know that I want to work with Tim and his partners, but how can I know for sure that I'm working with the right people?
vetting the operators is very important part. You have to know what you're investing. For example, when we buy cars, we research the heck out of those cars before we even go and buy them. How much they cost, how much gas they take, how big is the engine, how many people can it sit. I think we should approach investments from the same perspective. If you understand the numbers, and you have to educate yourself what you're investing, what kind of investments I have to be looking at, which markets. So getting a brochure about a deal, okay, well, this is the market, this is this, and this is that in that market, it's not going to tell you the whole story. You have to prepare yourself, and you have to maybe think about the markets you want to invest in, do a little bit of research about that. And then you find out, you talk to these operators, and you can ask them different questions. For example, how long they've been investing, where they were their last investments. Can they talk about their investments that have not really produced any value or lost money? Let them talk about that. These are really important points, and you'll
That's a
understand.
That's a good talking point right there also, because people need to have some experiences that didn't turn out so well. A lot of times you learn a lot from that.
Right. The most important thing is watch how they talk to you. If they actually get frustrated, you see their attitude coming up, it's the first indication that they're really not prepared to deal with their investors. They're really prepared to take your money, but not necessarily really work with you as a person, because we're all people, right? We're human beings, not human doings. Like we usually say, well, do this, and you're going to get this. No, we
Yeah.
have to understand people have lives, people have
Mhm.
families. So when you look at the investment, and you look at the operator, you have to understand that they have to be able to deal with people as well. They can't deal with people. How are they working with their partners? How are they working with the property management? So these are really, really important points that you have to look at when you're actually even considering investing in somebody. Oh gosh,
Real
there's just
Oh, there are. I was thinking real estate
yeah,
is we always say, especially multifamily, this is a team sport, and if you
yes,
cannot communicate, if you cannot, I stumble over my words and stuff from time to time, but if you're able to articulate yourself, to communicate with a variety of people and to have a good rapport, that's paramount, because as soon as you are in a adversarial position or a defensive position, and now that's when deals start falling apart and teams start getting
right,
cranky with each other, and I never want to participate in a situation like that.
absolutely. And don't forget, you don't just invest in people, you also invest into the deals themselves. So don't just go by your feeling, oh, well, like this guy, I'm just going to invest with him, right? That's what some operators are actually counting on. But you have to realize that person really knows their numbers. They actually understand the market. They understand how to run and write the deals. They will tell you what's risky. Ask them about the deal. Ask them how risky it is in terms of what do you see as a possibility if you're not going to be able to collect, let's say, all this rent. What if they close up a couple of companies that are supposed to be bringing all these tenants to your property, right? What are you guys going to do? Let them talk about it. A lot of questions you can think of that will put you on the right path towards whether you want to invest in this deal or not. So don't be shy asking questions. Never be shy, because the more questions you ask, the more information you're going to get, and the better your judgment is going to be about this. So ask
that
questions.
that is like true to the core right there, because like you said, you have the people and you fall in love and you're like, wow, these are great people. And they can be fantastic people, but and they might even have a very deep skill set. They might be great underwriters and great property manager, have good contacts and everything. But then, at the end of the day, if the deal is swampland that can't ever be developed, it's not going to be the best deal.
Absolutely. There are many things, and you can go deep as possible. Some even ask for a credit check on operators. I've heard of that.
I know Hunter Thompson, he has Cash Flow Connections. That's his podcast. And he makes a point in his book on raising capital that everyone should. I'm listening to his audiobook right now, and I can hear him like, it's so inexpensive to run a background check. And that was one of his things. Everyone should run a background check. It's inexpensive. He suggests, hey, speak to them first, let them know you're going to do it. Ask them if there's a red flag or anything that's going to pop up. And he said that serves two purposes. This is good. He was like, yeah, then you give them an opportunity, and you might learn some things that actually won't pop up on, get red flagged. And then you get to see if they're honest and own kind of some of, maybe some unfortunate situations. Interesting perspective. I am so fascinated. I love your story and I love your insight. Is there anything you'd like to leave everyone with as we close out our session?
Sure. I always say that you have to ask as many questions as possible. And I also add, always be positive, have the positive mindset towards everything you do. There'll be days when you feel bad. There'll be days when you feel good, but you just have to keep going no matter what. Just stay positive.
I love it. I'm a firm believer in that. I'm such a firm believer. I actually have the podcast episode on Mondays that is all on mindset, because I don't think anyone can perform at their best or lead a fulfilled, satisfied life or do what they need to do in this world if their mind is in the tank. People are an untapped potential. Just got to move the mind.
Absolutely.
Tim, thank you so much for joining us on Ask Me How I Know. It's such a delight to have you here.
My pleasure. It was my pleasure.
You have a lot of really good insight into everything.
Thank you, Julie. I always try to bring my best to people and help as much as I can. I have a lot of friends and a family, and I have a lot of partners that I work with on a day-to-day basis. Whatever I can help with, always feel free to reach out and ask a question or me. I'll be here to help.
Thanks so much for joining me for another episode of Ask Me How I Know. My guests are the most humble successes, so be sure to show them your appreciation by rating this episode 5 stars, which sounds silly, but let's be real. Ratings, likes, and shares, they take no time at all, but make all the difference in the world, if only to boost morale. Also, since I don't spend time on the how and why they got into investing, be sure to check out the show notes to get to know more about today's guests, including other podcasts they've been on that has a more traditional format that will give other details about their investment journey. It'll also tell you things like the most influential person in their life and what they're reading right now, as well as how to connect with them. And please, subscribe and rate Ask Me How I Know so it reaches other listeners like you. Until next time, go find your freedom.